Hello, we are now looking at chart of the day for the month of August and September 2015. We'll go through an article and a chart, and based on that, we'll answer some question. These types of questions are expected in the exam more often, where they would pick a news and they would ask you questions on what you get out of the news. The first news is China's stunning stock market moves in one huge annotation chart. It says that Chinese stock continue to plunge despite a rate cut from a public bank. Uh, the 5 trillion route rolls on. Authorities in China have escalated their blame game, looking at market sell-off scapegoats. The situation has captured the attention of the world, and market reverberation everywhere are attributed. Now, a Bloomberg intelligence economist Tom has put a fantastic annotation of chart that shows the market huge upswing and subsequent crash. So they have tried to put together all the reasons of what they believe caused the exacerbation or made it more worse. And then you have the policy timing starting from November. So this is one of the very big correction in the Chinese market that happened in the month of August September 2015. Let's look at them one by one. It says that market corrects close to 8% and regulators clump down on margin lending. GDP expanded 7.3, beat expectation. Uh, Change in rules on loan deposit requirement to ease liquidity pressure. Falling prices of roses shows deflation risk. PBOC cut reserve requirement ratio. Ministry of Finance announces a trillion yuan local government swap, and so on. So you will get this inside your chart. So let me copy this image and paste it here. So these are some of the events that happened one after the other, and many of these events are attributed the reasons why things became so worse. Okay, there is another one, and after that, we'll answer a few questions. It says that China orders bank. If you look at this is September 1, and this is August 26. So, this is a few days after. Just remember the dates because that will give you enough hints for the question. China's central bank added to measure designed to shore up yuan, making it more costly for traders to trade forward contracts. They will impose a requirement on the financial institution trading in foreign exchange forward for client, and this eases the reduction in foreign exchange reserves. And then market size, where they have talked about the market size of the spot and the future. Okay, let's now look at some of the questions that you can get. So the questions would be based on the market policy timing. A question is that is this a monetary policy decision or a fiscal policy decision? So all decisions taken by central bank are monetary policy decisions. So that's question one. Question two, holding reserve for increasing in change of reserves for currency forward causes. So in the news they said that they have increased the requirement. Will it causes a decrease in volatility, increase in volatility? Currency will go up in all situation, increase in forward contract sold. So if the reserve requirement are increased, then the forward and the future market will have less trades, and there are more chances that if less trades happen in the future, and as the prices are driven up by the arbitrage model of forwards, then this would cause a reduction in volatility. So the right answer here is 1. So generally when the government believes that there is a lot of volatility, the volatility are also caused by a lot of future and forward markets where it's being traded high. So for temporary volatility reduction measure, they change the requirement for selling and buying the futures. Now effect of currency on foreign reserve. So they had a chart here. Let me get you back to that chart. So this is a chart here. If you see, the foreign reserve was 4M, and it came down, whereas the currency depreciated. So if you look at the past from September 2014 to this September, the currency has been like from 6.15 to 6.35. So currency has depreciated. Currency depreciation means that people are taking money out of the market, and they are selling yuan and getting back their dollar so that they can return back. So always the currency depreciation would be accompanied by the falling of market reserves. So here, what is the effect of currency? So when currency depreciate, foreign reserve decreases. 2 is the right answer here. What will happen on the future prices when currency depreciate in spot prices? Now the future prices and the spot prices are linked by the arbitrage principle, where if the prices are not linked up, then there is an arbitrage and people gain money. So many companies and many banks do this dealer banking where they sell the future. So markets will follow an arbitrage principle. And the last question: which policies of below is not taken to avoid recession and a loss in the equity market? So we had a chart where we showed all those properties. So cutting reserve requirement, this is done to ease the liquidity. It's a measure to prop up the market so that there is more money in the market. Cutting rates is again an expansionary monetary policy. Debt market swap by the government when a municipal or a private company is having hard time. This is generally not related to this, but it's bad for the market, because if a company is dying and the government buys that company on an upside, so this is, just remember, there might be loss after this recession, but this is when markets were doing fine. So this is a thing which is not taken to avoid the market loss. So let me add this part when markets were doing fine, and this is also seen. This is also seen in the chart. So if I go back to the chart, you see here when everything was doing good, they did this swap. So Ministry of Finance announces trillion yuan local government debt swap. So back from fiscal cliff. So these kind and there is one more thing that was happened here. So these kind of things is not related exactly for the government attempt to stop the recession. So if a government swaps this, it means that they are in an expansionary mode, and this is not a crisis avoiding measure. So this was the questions that you can get in the chart of the day Bloomberg assessment test. I hope this was useful. For more, you can join my course. Thank you.